Hey everybody, Mortgage Seth here. Today I wanted to talk to you about the difference between a pre-approval and a pre-qualification and why it's so important that you know what you have when you're ready to go out and start looking for a home. First step should be always to talk to a mortgage advisor that knows the area that you're shopping in and that can do a full analysis of your qualifications instead of just a cursory review and giving you some kind of an online form that will give you some confidence but won't really be acceptable to the realtors and the home sellers that you're going to be dealing with. The difference between a pre-approval and a pre-qualification is that a pre-approval is a full analysis of your credit, your income, and your assets that are going to be used for down payment. So sometimes you might find somewhere online you could get a pre-qualification just by entering some simple information. They may not look at your credit, they may not evaluate all your documents, and it's only based on what information you put in. And the bad thing about that is that any realtor who's going to be working with you and writing up an offer, trying to get that accepted, knows that something called a pre-qualification just isn't going to be acceptable in this market to get the offer accepted. It really doesn't exude the confidence that you need that a full analysis of your situation has been done. Talk to a local mortgage advisor, someone who can help you do a full analysis. It may take a little bit longer. You may have some more documents that you need to upload, but there's really three areas that we're going to analyze for a full pre-approval. It's credit, income, and your assets. So to do a proper pre-approval, the loan officer needs to run a credit report. They're going to be looking at your score, looking at the debts that are on your credit, looking at the monthly obligations that you have, and they can even coach you on what you could do to improve your credit score or improve your qualifications by maybe paying down some debt or eliminating some of those monthly payments. So that's the credit piece. The next piece is the income. So a proper pre-approval is going to be looking at W-2s for the last 2 years, your job history, also your current pay stubs. That's the most important piece to know what your current income is that we can use for your qualification. And then the last piece is your assets, what you're going to be using for the down payment. Don't be fooled by the myth that you need 20% down payment to buy a house. Really, we can get you in with as little as 3% down, but we need to understand what the money is that you're working with, where it's coming from. Maybe you're getting a gift from somewhere. If it's coming from family overseas, for example, that may take a little bit longer. So the loan officer that's doing the analysis for the pre-approval is going to look at all these things. Usually it just takes about 24 hours once the paperwork comes in. But a full analysis is going to give you the confidence of exactly what your payment is, what your budget is, and the house that you can shop for. And then the more important thing is that once you go to a realtor and they're going to help you start looking for homes, that pre-approval is like gold for them. They know that they have a trusted loan advisor that's given you that pre-approval and that they can go out there and start shopping confidently because all the upfront work has been done and there won't be any surprises later. So keep all this in mind. If you need any more information, give me a call, send me an email or a text. It's mortgageseth.com. You can find all my information there and I'll be happy to help. Thank you.